We'd like to take a minute to thank our sponsor, Cash App. Cash App has been the #1 finance app on the App Store for almost 2 years. It was also the first major peer-to-peer payments app to support Bitcoin, and it's still the fastest and easiest way to turn cash into crypto. Cash App now supports Bitcoin deposits in-app, so be sure to move your Bitcoin from whatever wallet you're using to Cash App. Don't have any to deposit? Cash App is also the most convenient way to instantly buy and sell Bitcoin. No more waiting 5 days for your ACH transfers to come through. With Cash App, you can buy Bitcoin instantly. When you're ready to take full ownership of your private keys, just use Cash App to scan an external wallet's QR code. It's really that simple. Cash App also comes with standard banking features like direct deposits and others your bank would never even consider, like Cash Card, a customizable debit card that lets you instantly save every time you use it at Lyft, Whole Foods, and places like Chick-fil-A. It's also a favorite of the Block's analyst Steven Zhang. He saves money at Chipotle every time he gets a burrito. That keeps Steven happy, that keeps the Block happy, and that keeps the crypto world informed with the best news and research in the entire market. Download Cash App today from the App Store or Google Play, and I hope you enjoy the episode. All right. Ladies and gentlemen, thank you for tuning in to what is a very special episode of The Scoop. We are on location at Blockchain.com's New York offices with the CEO, Peter Smith. Very excited to have him on the show. He's been a long fan and follower of the Block, and I will respectfully put words in his mouth. They've raised $70 million. They are probably best known for their wallet business, which spans 40 million wallets. Active wallets in the cryptocurrency market. They've just launched an exchange. They operate a lending business, an OTC business. They're very active in the market, and we're very excited to chat all things wallet and exchange. And it's funny, and you mentioned it before we turned on the mics, Peter, that folks used to make fun of or question the robustness or the viability rather of a wallet business, and now it seems that's flipped on its head. And with folks launching an exchange what seems like every other week or every other month, now it's the exchange business that's being questioned as we possibly see fee compression and the like.
Yeah, so thanks for having me on. Obviously a big fan of the Block, and happy to talk about the industry today. I think one of the things that's worth bearing in mind is that at this point, I'm basically like a grandpa of crypto. I've been doing this a very long time, and been venture backed a long time in the space, one of the earlier venture backed companies. And there's definitely been like these cycles, and I've now been through several of them, even on the what is a good idea for a business in the crypto space front. And so I can remember when the single greatest idea in crypto was to be a mining hardware manufacturer. That meme has happened twice. Once way back when in the early beginning, once when Bitmain came to prominence. And then in the wallet space, early on in crypto, every major venture round was a wallet company. So in 2014, you had 4 big financings. Coinbase, pre-exchange, raised 20 million. Zappo raised 20 million. Circle raised 24 million. We raised 30 million. All these huge rounds, in crypto, all towards consumer businesses, wallet businesses.
Non-custodial and custodial.
And custodial, yeah, both. Yeah. And even BitGo back then was actually a consumer multi-signature wallet, and they raised, I think, 12, something like that, same year. So then, of course, over time, this is all cycles. At some point, it was a really dumb idea to have a wallet business. Then it was a smart idea. It was a dumb idea. It's gone back and forth several times. For much of 2019, I feel like people were very down on the wallet business because exchanges sort of came to prominence. And what people have to realize is exchanges only came to prominence when there was a wide diversity of asset pairs. So, back in the day, an exchange just had BTC USD, one pair. Not a very interesting product. Now, of course, exchanges are a little more interesting. But the point is, this stuff is incredibly cyclical. And as we were talking about before we turned on the mics, it does feel like now we're going from wallets are a bad idea to exchanges are a bad idea. And there's a lot of reasons why the exchange business is really tough. One of those reasons is that it's a power user product, which means that it's much harder to create lock-in. So, if you're someone that uses your Bitcoin wallet or any consumer product a few times a month, you're probably not going to change products. Like we have users that have been logging in monthly, quarterly, every year for 6-7 years, right? With exchanges, people are always looking at new products, new UIs, liquidity, fees. It really matters to them. And so keeping those people constantly satisfied is really tough. And there's not that many active trading customers in crypto compared to just the sheer number of consumer crypto holders or consumer crypto users.
Are you saying there's less brand loyalty? You think
there's really no brand loyalty in prosumer products?
You don't think there are traders out there who, really love Kraken UI, Kraken UX, and want to stick to that experience versus
you certainly can get used
others.
To it, right?
Sure.
But the minute someone comes out with a more compelling products, like when I mean that by pairs, a better UI, better fee structure, like you're sort of constantly under threat. And as an exchange, because your fees are very low, actually you make most of your money not from institutions, not from the very most active, but from the middle. You don't make a lot of money from people that trade, log in once a quarter and place one trade. And those people are very sticky. You make most of your money from active traders that are trading every single week, maybe every single day, on a retail level. So those guys are very, very flighty, to put it lightly. And so now what is it good about an exchange? Well, an exchange can make a lot of money. An exchange can have a network effect around liquidity. Liquidity is very hard to create. Takes years in most cases. We've been very fortunate on that front. But we are kind of transitioning into a overcrowded exchange space where a lot of these exchanges don't have any source of edge. And I think that'll be interesting to watch it kind of shake out.
I do want to go back to the wallet business, but first I have one question thinking about the launch of the exchange previously known as the Pit, now Blockchain.com exchange. You had one thing that definitely would play into your favor. You had 40 million wallet accounts sending flows outside to Coinbase and other exchanges every day to make various trades, basically revenue that you weren't capturing. But at the same token, no pun intended, folks, at least at the time, and I think even still, are looking to connect to less and less venues. I mean, to your point, it's a very oversaturated, crowded market. With those two factors in mind, how did you see that rollout play out? Did the flows that you were seeing go off to other exchanges? Did you capture some of that? To what degree did you capture that? And does that continue to evolve?
Yeah, so actually the name change is a good story too. We were experimenting with this idea of creating a standalone brand that would be, a little more edgy, different marketing look and feel. And then we launched and we ran a lot of A/B tests and the Pit was a name I liked. And as it turned out, pretty much customers hated it. You could put almost anything in the A/B test and it would outperform the Pit. You could put like chicken and it might outperform the Pit.
What were some that actually outperformed
the Pit?
Yeah.
Everything. The Pit lost every A/B test.
But chicken wasn't one of them.
Chicken, we never ran chicken, but we ran things like, blockchain exchange, blockchain trading, blockchain pro, BCEX, like really a pretty wide variety of ideas. We ran Mercury, which was the internal code name of the project and is still the code name of the matching engine. None of it, everything outperformed the Pit. And we have that tradition of blockchain where we celebrate mistakes 1 week a year, sort of mistakes and what we learned from them. And this year, my mistake was definitely my advocacy of the Pit brand, which was crushed by customer feedback.
So after you changed the name, what did you see any change in volume growth or volumes?
The reality is that because we have this sort of like captive audience, we have an ability to generate quite strong growth on that product and have seen really strong growth on that product. But changing the name has improved conversion and reduced the number of support tickets asking us, is this your exchange? Which was a big support ticket category for a while.
Interesting.
Always embarrassing.
As a percentage, what did it make up?
I don't know offhand, but it was, thousands.
Thousands of support
To
tickets.
keep in mind, we get millions of support tickets.
But it was a big chunk.
Yeah, it was not insignificant.
Okay, so name
So the
change.
exchange is actually it's doing pretty well in the sense that it's growing somewhere between 20 and 30% week over week, which is pretty incredible for any product actually, particularly in a market where volume has mostly in the spot market been going down. It's been doing really well. From a liquidity perspective, it's a top 5 spot fiat crypto exchange. So it's incredibly liquid. And it's trading, I think the launch week was 3 months ago, basically, maybe a little more than that, three-ish months ago. The first week of launch, it was a top 100 crypto exchange. Then it was top 50 in month 2 and top 20, 25 in month 3.
So how much of your wallet customer base did you capture with the exchange?
Oh, it was instantaneous. Just absolute 100% capture in the first 8 weeks.
That's amazing.
No, that didn't happen. That'll take time. And we've kind of always been settled in for the long haul there. And I think but we have had the biggest source of customers on the exchange is people that are linking their wallet account to the exchange. So that's that thesis that we had, our source of edge in the exchange space is definitely playing out and driving, the 20, 30% week over week growth.
Mm-hmm.
We, want to build a full stack crypto product experience in the sense that we want to make it possible for anyone to easily buy crypto, sell crypto, use crypto, trade advanced crypto financial products, borrowing, lending, full stack, in the sense that I think the product experience of 2017, where you had like a Google Drive spreadsheet reminding you of all the accounts you had at various crypto companies, is a one-time sort of experience, is an experience that's going away. I think in the future, you will have a customer will have one relationship with a crypto company for the most part. There'll always be those pro, sort of very geeky, wonderful people who have an account everywhere. But I think the average human being will have one primary relationship, just like you have one primary relationship in the fiat finance world. And you'll do most of your financial services through that one primary relationship.
When you were on Laura Shin's podcast last year, you talked about the size of the non-custodial market and the custodial market in terms of transactions, the former being much larger by your estimates of your own proprietary data. You have data scientists somewhere in here spouting off and doing their various businesses. It seems strange to me that would be the case. And if it is the case, why would you then go from this non-custodial business that is apparently so large to this exchange business that is more insignificant?
So a couple reasons. So first of all, wider perspective, we've been collecting the on-chain data for the crypto industry since before anyone else, since 2011. And so we do have quite a deep data set here. I think the other thing to remember, though, is that, we invested heavily into a platform to track flows, particularly within the Bitcoin ecosystem, because it's the biggest ecosystem. Our non-custodial wallet generates about 25 to 30% of all Bitcoin transactions on a daily basis. The next nearest competitor is another consumer company, and they're about 10 to 11%, and they're a custodial product. The next one behind that is a non-custodial product. I think that a lot of people own Bitcoin via a centralized custodian. But when you look at where the Bitcoins are sitting across the ecosystem, most Bitcoins are still sitting in non-custodial sort of storage setups. Mm-hmm. Would be us. We have a huge number of Bitcoins in our systems. And then folks like, hardware wallets, even people that set up, sort of Bitcoin QT offline wallets way back when, because, the the earlier the system, the more Bitcoins it's likely to have in the crypto space because of the, sort of natural effect of, when we got started, Bitcoins cost $5. That said, there's things that you can do for customers when you have a custody system that you simply can't do when you are non-custodial. One of those things is offer a really compelling active trading product where price discovery can happen. And so what we wanted to do was make it really easy for our customers to take their non-custodial Bitcoins, which we believe that's our default is how do we get customers to hold their own money? Because we believe that's important from a financial freedom perspective.
Be your own bank.
Be your own bank. How do we get customers, how do we make it really easy for them to trade on that venue? And so we've built things that connect the wallet. You can view balances both ways across the product. And over time, I think you'll see protocols. One is a very early one, which is not quite ready for prime time, but is very cool, in our opinion, called Arwen, where you'll be able to hold on to your crypto, but still trade on a centralized order book. Magical math. Us crypto people, we love our magic math. And so over time, I think you'll see less and less balance on the venue. That's because that's our default position, is how do we decentralize custody as much as possible. But there are some things you can only do when you have custody of those funds. And I think that what we found historically was by not participating in that market, we were sending customers to other places. And sometimes they would have good product experiences, and sometimes they would have horrible product experiences. Hacks, theft, losses, support tickets not being responded to. One of our biggest categories of tickets in 2017, 2018 was tickets about other exchanges. So we're getting, we got 1 million tickets about one exchange. A very well-known, well-regarded company in the crypto space. We got 1 million tickets about customer issues with this product. And for me, when we have this relationship with customers,
and what does that, and how do you respond to that? And what does the customer do in response to that?
Usually we're getting the ticket
because move them off blockchain.
Doesn't move them off blockchain. Usually, they had some positive customer experience with us, with something we really, really focus on. And then they're having a negative experience over there, and they ping us and they're like, hey, can you help me? And, I've instructed our team to do what they can in those scenarios. Now, of course, if it's a question about UI, we can sometimes help them. If it's a question, a general crypto question, we can help them. If it's, I had this problem, we don't have access to their database. So, and that happens across crypto companies. It's not just, there isn't one offender. And so we wanted to be able to take better care of our customers end to end. And then of course, as you noted, there's a revenue opportunity there. We are business. Mm-hmm. We like that monies. And so, we want to go out there and capture more of it.
Let's think about the money that exists in the non-custodial wallet business itself. I remember when we first started engaging with each other, that was a question I would always sort of pick at you about.
You're better looking then.
I was. Times have changed. You didn't have
crypto's
teal
hard.
hair. It is hard. It's really, takes a toll, especially having to work with Mike Dudas.
Oh, that guy. Woo.
Could you imagine? So back then, the obvious revenue source for the business would have been advertising, I guess. But
so you got to think about the wallet as a web browser.
That's part of it.
And for crypto, so what, the human mind works on analogies and they're largely imperfect. But I like to think of the wallet as a browser. And within the browser, people make money in different ways. They make money in advertising, e-commerce, transactionally. And the wallet is the same. We make money from eyeballs, impressions, very related to the Explorer product. We make money by providing liquidity. So there's a brokerage product inside the wallet, both crypto to crypto as well as fiat to crypto. And we will likely make money with lending products as well inside the wallet itself. And so one of the hard things about the wallet is that it's not like, when you're like, how does no one asks how an exchange makes money. Because the funny thing is exchanges, actually really successful ones, often make more of their money in ancillary services than they do in commissions. But
what's the breakdown here? Do you make more of your money on auxiliary services or the wallet business?
The wallet is the driver. Yeah. The wallet's for sure the driver. But, for us, it's really important to build, and then we've talked about this before, to build a diverse set of revenue streams, particularly because the wallet business is very correlated to the crypto market at large. And so the focus for much of the last 2 years has been building sort of adjacent yet less correlated revenue lines. But that's the hard thing about a wallet, though, is it's not a point and shoot simple product. It's a browser for a whole new financial system in which your job as a wallet provider is to expose information and choices and hopefully provide some liquidity to the user, versus a very narrow thing like a hardware wallet is just signs a transaction, right?
Mm-hmm.
Or a exchange, which is a fairly obvious function. A wallet is a deep product. It's a complex product to get right from an information UX perspective. And our primary value is being easy enough for anyone to use, still non-custodial, sort of financial decentralization, disintermediation, freedom, and third, support a variety of chains. Doing those three things simultaneously while onboarding millions of customers, every year all over the world in 17 languages is a complicated, project.
How do you continue to push the envelope with that product, improve it, expand it, make it more user-friendly?
I wish that we pushed harder, to be honest. It's sometimes, it's a big responsibility to know that you're shipping a product to so many people who rely on it for something really important. And in many cases, in parts of the world where they are really relying on it. Venezuela, Brazil, Ukraine, these kind of places where they're really relying on you to get it right. And so we're a little more conservative now than we used to be. I think for us, pushing the envelope is going to look a lot like some of the stuff I mentioned around how do you pledge capital but not give up custody of it? How do you, do on-chain lending? How do you do on-chain social consensus for restoring access to funds? So this stuff is sort of deep tech work and challenging, but I think it's stuff that we're pretty excited to get into.
In terms of reaching those foreign markets, those markets in the underdeveloped world, right, where banking services are scarce and difficult to access for many, many folks, do you think with things like Libra coming online and folks questioning whether or not crypto has actually tapped into those areas of the world, has blockchain fallen short of this mission of banking the unbanked or enabling folks to become their own bank?
So we've never specifically set out to bank the unbanked.
There's a difference there.
There's a huge difference.
Be your own bank.
Yeah.
And bank the unbanked.
Our mission is to be your own bank. Our mission
What's the difference between the two?
Be your own bank says we want to enable anyone to be a self-sovereign financially individual.
Mm-hmm.
We want, you, Frank, to have the tools to hold your own money directly, to be in control, to be sovereign as an individual. Banking the underbanked says extend financial services to people who don't have financial services today. There is overlap between these two things. I think that in a lot of cases, the financial services that someone who's unbanked living in Ghana today needs is very unrelated to
what you guys
be
are
a
doing
self-sovereign financial individual, right? And so the two things are not the same thing fundamentally. So I don't feel like we've delivered on a mission of banking the unbanked, because that's just never been our mission. And I'm not sure that we would do that via crypto anyway. But I do feel like we've delivered that vision of making it pretty easy for anyone to be a self-sovereign financial individual. And the proof is in the pudding there. If we hadn't delivered that, we wouldn't be generating the most Bitcoin transactions. We wouldn't be in the consumer position that we're in. And that's an incredible accomplishment from the team here. because if you wind the clock back to when all those financings were happening that I was talking about in 2013, 2014, no one thought that a non-custodial approach would get mass adoption. And most of financings were to custodial solutions. Two of the biggest examples of that, having not really gone on to seize a lot of the market. I think though, as someone who lived in developing markets, including in Africa, it always cracks me up a little bit when people in fintech talk about banking the unbanked.
Does it crack you up the way Libra and Facebook sort of describe it?
It's incredibly naive. Yes. I wish them the best, and I hope the project works.
It's strange to me that Facebook and other firms in the space view stablecoins as being this panacea to this issue of unbanked people.
I don't think they view it.
If you have a stablecoin, there's so many other steps that you need to implement to actually get people to engage with that stablecoin.
Yeah, what it does do for the big tech companies is it makes commerce on the internet easier, which is net good for the tech company.
Good for Facebook merchants' business.
But I don't know if it has a lot to do with banking the unbanked. Maybe in the sense that, technology, the more efficient it is, scales more, lower cost of service, et cetera, sort of a third or second order effect. And I actually love the work that the Libra folks are doing. I hope it comes to market. I think that the reality is the Chinese approach, which is supported by the government as part of the Belt and Road Initiative, is going to hit the market way sooner and probably be a way bigger deal, both to the crypto market as well as the overall global financial system.
Why is it good for the crypto market?
Look, I think credentializing, right? Two, so if China can do it, if China does it, Sweden, it's not a big deal when they do it. It's not a big deal when Turkey does it. It's not a big deal when Germany, so on and so forth. But secondly, the Chinese view it as a way of encouraging trade through a specific other region of the world that already has pretty high crypto adoption. And on top of that, anytime you have a really high quality asset come into the crypto space, that's net positive for the crypto space, in my belief.
Mm-hmm. So Facebook Libra, naive, but you love it.
I think that and maybe, I think some of the things that they say around the project's sort of relevance to the unbanked is naive. But it is a good storyline. And so maybe it's not naive at all. Maybe it's the opposite of naive.
I don't think they foresaw the regulatory headwinds that ultimately came to fruition.
I am very confident that they were not ready for it.
Maybe we could talk about that a little bit. Not Facebook's regulatory headwinds, but we mentioned it over Telegram. We could get into it now if it's something you're comfortable with. I want to throw something out of left field, but you said that the environment in the UK is a little more clear. There's more clarity than there was.
Yeah.
Talk a little bit about that.
Yeah. So I'll caveat with saying that I sort of got out of the crypto policy and legal game a long time ago. Hired some professionals, and they do an admirable job. That said, the UK has been a good place to be in the sense that it's been a very collaborative environment. And on top of that, it has become more and more clear over time. The big sort of change this year is that, crypto firms now sort of are more part of the SCA process than they previously were, which I think is net good for the whole market. That said, I think there's still a long way to go to figuring out regulatory for crypto internationally. And there are a lot of challenges in front of the whole industry, partly to do with the fact that you have sort of a big bifurcation between what you could largely describe as the regulated and or largely normalized section of the industry, and then the sort of cowboy section. And the two things are so related that it's kind of hard to separate them. I think the research that's most clear on this is like the stuff Bitwise has put out that you guys have covered really well, which makes it quite clear that like there's sort of two crypto systems and they're related, but also strange.
Mm-hmm.
And
the activity of the Wild West section hurts the.
I mean,
the
absolutely.
regulated aspect.
I think the Plus token story is a good example of that, where you have a huge amount of money being sold via two exchanges in Asia, Binance and Huobi. A huge amount of Bitcoin being sold via them that was stolen from people from the whole Plus token scam. I think you guys actually. I read the report via the block, the Chainalysis report.
It had a huge impact on the Bitcoin market.
Huge impact on the Bitcoin market, Bitcoin price, both like all the people that got burnt by the scam, as well as like, essentially depressing the price of Bitcoin for, probably 6 to 9 months. And the fact that that kind of stuff can still happen at that scale is worrisome.
Since you've been in the market for so long, and blockchain has been in the market since its earliest days, really, you must have some war stories. I've had Michael Morrow at Genesis on the podcast, and he talked about one time he had some counterparty enter a room with briefcases of money looking to make a trade. Obviously, the space has grown up a lot since then. They didn't make the trade, to be sure. When you hearken back on those earlier days, even 2017, right? What are some of the more interesting stories you can share?
Well, I remember when Mt. Gox went down, and getting the updates from Magical Tux, in the Skype chat. That was pretty intense. There's been several sort of like cataclysmic events in crypto, and I kind of remember those pretty well, as it turns out. I think for me, what I look back on really fondly, rather than sort of a war story, is the Bitcoin event in Amsterdam, which was the sort of kind of funny. It was like the peak Bitcoin Association moment. They put on this really nice conference in Amsterdam. And it's really the first time that a lot of people got to see each other, like meet each other. And it was the first time that Bitcoin and crypto felt like a real community and a real movement. And of course later all communities and movements start to fragment and et cetera. And we all know about the later Civil War. But there was this really beautiful moment there that I walked away from that event in Amsterdam being like, wow, this is real. This is like worth dedicating your life to. And that was when, shortly after that was when we, professionalized business, raised a Series A, and so on and so forth. And so I've always remembered this sort of really sunny afternoon in Amsterdam with my co-founder Nick and my co-founder Ben and all the other sort of original crypto OGs. And just, it's just a beautiful moment that has become sort of like something that I've been very thankful for over the years since.
Andreas, our producer, is shedding a tear right now. Well, it's nice to harken back on days of yore. Let's look to the future for blockchain. 2020, what should we expect?
Listen, so we have, really 4 business units here. We've got our data business. So if your project is publishing interesting data that you want more people to see, let us know. We're happy to work with you. We've got the wallet business, which we've spent the podcast talking about. You'll see more functionality, more assets, some pretty cool product innovation. We have something coming out around the end of the year that I think people will be really stoked about. Got the exchange, get on there, trade. If you got product feedback, send me an email. It's Peter at Blockchain. And then we have our markets business, which is sort of like a little investment bank, doing a lot of structured products, a lot of lending, investing, liquidity.
What type of structured products?
There's all kinds of stuff you can write, like, off takes, vol. Got a pretty talented sort of quant team inside there, and we're willing to do a lot of unique work with clients. Mm-hmm. And so if we can be helpful, you're working in crypto or or even you just have a product you want to build, and just get in touch.
What are some of the more interesting ones you've put together?
Probably some of the big offtakes.
Yeah.
And then some of the big like working capital lines where people want to retain their crypto portfolio, people, projects, institutions. So say you launch, Frank Coin, and you raise a bunch of money for Frank Coin, but you, tax reasons or whatever, don't want to sell all the Bitcoin you raised. We might do a working capital line for you, which can be a tax efficient strategy, from what I understand.
Mm-hmm.
And we're going to try to like take that down to the retail level, which I'm pretty excited about.
And would you need any sort of licenses, or is there a regulatory framework around products of that nature?
I'm sure. And I leave that in the capable hands of our general counsel, Howard.
That's interesting. Who do you think are your competitors now? The business has changed so much. It's evolved.
Sort of every unit has a competitor inside of blockchain. It's kind of interesting to think about us as like a group company, like a holdco, and we run existing products and we build new ones. Like, the lending business is very, very much a new business and a huge business. So we have competitors everywhere, but a good example is the lending business, which is very new, very recent, growing very fast.
3 months old?
I guess it's probably 5-6 months old now.
This summer, right?
Yeah.
So.
And, that business has competitors like, Grayscale or Genesis,
Mm-hmm.
Galaxy. We also do a lot of business with Genesis and Galaxy, collaboratively, great relationships. So I don't view the crypto world at this point in time as zero sum. I think that right now the crypto market is actually pretty small in the grand scheme of finance in the world. That's not really a qualitative view, and it's a quantitative view. We have yet to reach 1% of the size of the mainstream financial system. So at this point in time, I think the focus from everyone should be on building something worth competing over. Whereas right now, I think it's, we should be all collaborating.
Mm-hmm. Entering businesses like lending is an interesting step for a consumer business to make, right? Maybe a risky step. People have talked about.
Well, we're not. We haven't really been purely a consumer business for 2 years now, right? So we're famous for the consumer business because you do marketing for the consumer business. Mm-hmm. But we've been in the sort of institutional or, call it big size business for quite some time. I guess even more than 2 years now.
Coins on hand. That's...
Yeah. And I think over time, you want the business to be constantly evolving and expanding. At least that's our view. And we always want to be a place where, if some person comes and is like, hey, I've got this idea to do something, we're going to be like, okay, cool. How do we make that happen? And that's very much the culture here. I think the last time I counted, we have 13 former founders and CEOs working at blockchain, out of a headcount of, 200 people or something.
Aside from the name, The Pit, what are some of the ideas that maybe were a bit lackluster, didn't pan out quite as well as you anticipated?
At the risk of turning this into a confessional podcast, I think one of the things that I underrated as a CEO was, 3 or 4 years ago, everyone's like, CEOs, a little older than me, not older than me, but more advanced in their journey. We're talking about how hard it is to build a management team. And I was like, what are you guys talking about? You interview some people, you hire some people, please. It's really hard to build a very high output, highly effective management team. It's when I started doing it, I was like, okay, this will take me a year. And I was hilariously underestimated. It's tough to bring in a very talented group of people, get alignment in the right place, get the chemistry in the right place, and then execute at a very high level, and you need that execution almost immediately. while they learn a new market. All of that simultaneously is very tough. Like, you guys at the block have sort of a very funny team spirit. You seem to mostly talk to each other via Twitter. Just a lot of tweeting at each other, bullying each other on Twitter.
Oh, you love it.
And I love it.
Yeah.
I'm a huge fan.
He messages me whenever Larry dunks on me hard.
And you know what? It's funny. I don't message Larry. Like I don't message with Larry.
Probably for the best.
I just message with you for some reason. And I really enjoy it when you guys really crush each other. I think it's great. But you have to build that sort of camaraderie, and you have to do it in a pretty tough environment, in a business that's incredibly global. We have 5 offices. So that's a big challenge. And I think my, underestimation of the challenge was probably a mistake. And when I talk to, crypto founders that we've invested in our venture fund, or, other tech founders that just want to chat, they're like, hey, what should I be thinking about early? I'm like, start thinking about that.
So you've had some people, come and go, obviously.
Yeah, I mean, we've been
business, but
we've been doing this for 7+ years. So, yeah, we have some alumni.
What do you think is the main reason why people are either attracted to blockchain or end up running for the door, or
sure,
to the door?
So I think that,
depending on the person,
I think that it's probably easiest to just talk about the kind of people that are successful here, because that's usually what attracted them to work here, and usually the ones that end up going are just because they didn't fit into the alignment. People come here because they're really excited about building in the environment that we offer, which is a lot of autonomy, a lot of flexibility, a lot of room to run. There's not a lot of, sort of micromanagement here. But at the same time, being able to do that at scale. So when when you're a product manager of blockchain and you launch something, millions of people are probably going to see it. Which, in the crypto space, there's very few companies you can work for that's true. And, people that are very successful here in the long term are the ones that are just kind of, constantly willing to stand up and take on the next challenge. We really reward a bias for action and a customer focus. That doesn't always work out. And, over time, we've kind of developed a better understanding of what backgrounds will result in success here and what backgrounds are less likely to result in success here.
Do you think, as CEO, do you think you can be tough? Maybe a little too tough?
I think that the other thing to understand about being a CEO is that I've also been one for a very long time, and I've probably evolved over that time. We hope I have. I think I am. Most people here would describe me as intense.
Yeah,
and I think
that's what I've heard.
I'm very intense, and I don't try to pretend I'm not. I think that I've also been very specific to never ask anyone to do anything more than what I would do. So, if the team is here, if we're pushing hard, I'm going to be here. Like, no one is ever going to work harder at blockchain than I am. And I'm very committed to that. But I am an intense CEO, and something that, at this point is probably never going to change.
Well, I think that's a really interesting place to end the show. Peter, thank you so much for coming on. This was a really interesting conversation. Thanks so much for listening to this episode of The Scoop. We hope you tune in next time, and don't forget to subscribe and favorite wherever you listen to your podcasts. We'd like to take a minute to thank our sponsor, Cash App. Cash App has been the #1 finance app on the App Store for almost 2 years. It was also the first major peer-to-peer payments app to support Bitcoin, and it's still the fastest and easiest way to turn cash into crypto. Cash App now supports Bitcoin deposits in-app, so be sure to move your Bitcoin from whatever wallet you're using to Cash App. Don't have any to deposit? Cash App is also the most convenient way to instantly buy and sell Bitcoin. No more waiting 5 days for your ACH transfers to come through. With Cash App, you can buy Bitcoin instantly. When you're ready to take full ownership of your private keys, just use Cash App to scan an external wallet's QR code. It's really that simple. Cash App also comes with standard banking features like direct deposits and others your bank would never even consider, like Cash Card, a customizable debit card that lets you instantly save every time you use it at Lyft, Whole Foods, and places like Chick-fil-A. Download Cash App today from the App Store or Google Play, and I hope you